Hi, my name is Mandala Krishna and my student ID is APS 2050, and today I'm going to do a presentation for the corporate accounting HI 5020. Firstly, I'm going to give you introduction about the two companies which I've used for the assignment. I've used two companies, one is Texas and the other one is CSL. First, I'll going to roughly give you an introduction about the Dexus company. Dexus is one of the prominent real estate investment trusts in Australia. It aims at owning management and development of real estate funds and resources on account of the independent stockholders. And the other company which I use is CSL. CSL, it is a biotechnology firm which operates on international level and focuses on researching, developing and delivering advanced medication to save the lives, provide healthcare facilities to general public and support people potentially with fatal diseases. They are providing life-saving commodities in almost 60 states and also creating employment on a large scale. The most important aspect for the companies is the finance. The sources of finance used by the selected companies. As you know, finance is the most important aspect in managing a business because even a slight mistake in choosing the right sources to raise the funds can create a lot of hurdles for the business in future. The purpose of this assignment entails the evolution, changes, the merits, the demerits, classification, sub-classification of sources of funds, and referencing to certain accounting standards, which is AASB 137, which I'm going to discuss later in the assignment. The classification of assets and their basis of measurements. The sources of funds used for one of my company, Dexus, is the statement of the financial position of Dexus for the past 3 years show liabilities and bearing interest. The funds management of Dexus has provided the accessibility to capital resources and a stream of stable annuity income and revenue as well. Deprivation of financial resources, delay in liabilities of taxes, supply for the debt section, and contributed equity reserves and retained profits from the equity section as the sources of fund. The sources of funds for the next company, CSL. The annual report of CSL Limited for the last 3 years from 2017 to 2019 shows three sources of funds, which includes contributed equity, the issuance of shares, retained earnings and interest-bearing liabilities. The retained earnings being the major and the most consistent source of funds for the corporation, as it increases from 7,403.9 million to 2017 to $9,612.3 million in 2019. Two of three sources of funds remain consistent throughout the 3 years, while contributed equity keeps on increasing and decreasing and sometimes acting as the use of funds instead of the sources. The changes in different sources for the funds of the Dexus. In 2017, the interest-bearing liabilities were only part of non-current liabilities, but later in 2018, they became a part of current liabilities, hence increasing by 2.4% in 2018 and increasing further by 21% in 2019. The firm declared that they went to increase the stockholder reserve by initiating a security market and opportunity of buyback. Contributed equity increased by 0.2% in 2008 and 7.83% in 2019. Financially, retained earning increased by 116% from 2017 to 2019. Changes in different sources of funds for the CSL. The retained earnings being the major source of the fund for the corporation, it increased by value of around 101,104 million on average each year, 50% increase every year. This kind of sources ensures slow but steady growth. The contributed equity is not consistent source of fund for the company. It can be seen as a secondary fundraising tool used for financing short-term capital need, as it increases from 2.2% in 2018 and decreased by 0.67% in 2019. The buyback of the shares by the company after the issuance of 16.1 million worth of shares. Composition of internal external funding for the DEXs. In 2018 2017, 9.7% was generally internally, but retained earnings, and 92.1% were generated externally through debt and equity financing. In 2018, 12.6% was generated internally, whereas 87.3% was generated externally the same way. Finally, in 2019, 12.3% funds were generated internally by retaining earnings, and rest of the 8.7% were generated through other means. Composition of internal and external funding for the CSL. The funds generated by the company are 63.6% internally in 2018 by the issuance of shares and through retained earnings, while external financing consists of 36.4%. The composition of the continues to change and shift from 63.63% internal financing to 77.9%. In 2019, it has also not been used the contributed equity for financing, and therefore using retained earnings as the only source of income. Merits and the shortcomings of different sources of DEXs. By retained earnings, the DEXs group does not have to pay dividends or interest payment each year, or nor it's liable to pay the whole amount back to some entity, as it is an internally generated fund. Hence, it is very good source to expand business or reinvest. However, increase in the contributed equity over the years indicate a better financial position for the company. Deferred tax liabilities benefits by providing tax-free development, and it is often occurs during the years of employment when the taxes and the revenues are much more than the taxes and the revenues. The merits and the shortcomings of the different sources of the CSL. Contributed equity means issuance of stocks offers the benefits of not being liable to investors, because in that case that is not really borrowing. Continuously justifying the actions to the shareholders can in fact result in good company focus and profitability for the company at large. Retained profit is among the major means of income. It is not for a small corporation that is established profitable business. The interest and the non-interest bearing liabilities DEXs. For the DEXs, the liabilities are initially categorized into liabilities of short-term and long-term, and subcategorized into liability of merits and non-interest bearing. Non-interest bearings notes include payable of trade, whereas notes payable are interest bearing, and compromise of interest payment particular intervals. Moreover, derivative market instruments also involve interest payments depending on the agreement, however. And interest and non-interest bearing liabilities for CSL, payable of trades and other resources, liabilities in the current taxes, supply and disposition of government rewards, deferred tax, liabilities of the retirements, interest bearing liabilities, and other non-current liabilities. I'm just going to briefly describe about the ASB 137 province of contingent liabilities and contingent assets. The aim of the given standard is to certify the suitable criteria of recognition and the proper measurement tools are used for the provision. Conditional liabilities and assets and necessary details are shared with the financial reports with the help of the notes to guide the users in understanding the timings, cost, and nature. And now in reference to the ASSP 137 provisions and contingents and liability assets, DEXs, there is no different reference to the AASB 137 in the annual report of the DEXs for the past 3 years. However, it recognizes interest-bearing liabilities, and for the CSL, the company has not made any direct reference to the AASB 137 in its annual reports of last 3 years. However, it is referred other accounting standards. Now I'm going to discuss about the categories of assets recorded by DEXs. DEXs categorize its assets into categories of non-current and current, and further categorizes into tangible and intangible assets, whereas the CSL categorizes assets into two divisions. Current assets include the equivalents and the cashes, inventories, assets of current taxes, receivables, and other kinds of economic resources. Non-current assets include property, unconditional resources, disposition of tax resources, plant equipment, receivables, economic assets, and the assets of the economic benefits of the retirement benefits. And finally, I'm going to conclude this presentation. Upon careful study of the both companies' annual reports and other sources stated, we came to the conclusion that all sources of funds keep a significant place in each company's financial statements and therefore affect their financial positions. The most common sources of funds used by both the companies are interest bearing loans, retained earnings, reserves, and contributed equity. And for both the companies, there is a positive change in overall funds. However, CSL shows a decline in interest bearing liabilities due to the increase in interest rate. Perhaps the categorization of assets is same for both the companies except the CSL as retirement benefit assets, contract assets, etc. And DEXs also have derived marketing instruments. Lastly, before concluding, the measurement basis for assets used by both the companies is almost the same. That is, short-term assets are measured at the reasonable amount and inventories are asserted as NVR. And that concludes my assignment. Thank you very much.